In New York, and this is Bloomberg Technology. Coming up in the next hour, Uber's rocky debut, the biggest U.S. IPO in nearly 5 years, meets market anxiety. We'll sit down with Uber CEO Dara Khosrowshahi to talk about the underwhelming first day. Plus, the U.S. delivers on its threat to hike tariffs on more than $200 billion of Chinese goods after talks fizzle in Washington. Meantime, President Trump says there's no rush for a deal. And a major player is making waves in the lucrative Apple supply chain. What we can tell you about the next generation of iPhones. But first, to our top story. Pop, it did not. Uber shares fall into the red on their first day of trading. Shares closing at $41.55 a piece, falling 7% on the day, giving Uber a market cap of $69.7 billion, well off the $120 billion its bankers had once floated. I spoke to Uber CEO Dara Khosrowshahi after the ride-hailer's lackluster debut. We're going to bring you that in a moment. But first, what's to blame? Rocky trade talks, market volatility, or Uber's billions of dollars in losses? Let's bring in Bloomberg's What'd You Miss co-host Romaine Bostick for more. So, look, I was on the floor. It was not a good scene. Every half hour, the opening price, the indicated price, seemed to drop.
Right.
And then we got the open at $42 a share.
Yeah, well, you had two big issues here. One, you had a lot of investors, or potential investors, I should say, who just saw this for what it was, which is a liquidity event for existing folks in this. And a lot of folks really didn't want to get involved too soon. They knew this was primarily being sold to institutions. A lot of the sort of individual traders were basically saying it's better to wait this out. At the same time, you had this coming against the backdrop of one of the worst weeks that we've had basically since December for the broader market. Now, we did rebound a little bit today. But remember, there was a sweet spot we had for the market back in sort of from February to about mid-April or so, where you could pretty much sell anything you wanted into this market. There was a high risk appetite. People were willing to buy into these growth narratives. But over the last few weeks, you've seen people have gotten a lot more skeptical just about the market as a whole, and Uber sort of came right into the middle of that vortex.
Right. The market rebounded, and Uber even closed below that $42 price, which was still below the low end of the range that they'd priced at yesterday. And I think about Lyft, Pinterest, Zoom, all of these tech IPOs that have recently had a big first day pop, and I can't remember the last time stock dropped on the first day.
You've had very few. Probably the most recent examples, the biggest were Moderna, which is a big biotech company, and ADT, which was over a year and a half ago in early 2018. They both fell on their first days of trading, and they actually ended up doing pretty poorly from the time of their IPO to today. I think they're both still in the red. And again, both of those stocks, there were different stories, but they also had the same issue where a lot of people just really weren't buying the narrative that the company was spinning.
So that's the question. Is this going to be the start of a not good run, or is this going to be just the bottom and only up from here?
Well, you know, here's what someone said to me that was very interesting. They said that we're essentially towards the end of an economic cycle here, right? That's the belief. And the idea is you have a company coming to market that's saying, we're a long-term growth story. We're not profitable now, but we will be. And these investors are asking, can they still meet that growth narrative if the economy, the global economy, softens or even worse, goes into recession?
So, look, Dara Khosrowshahi's been out there trying to compare the company to Amazon. Clearly, investors today weren't buying it, but maybe in the future, investors will be willing to take on more long-term risk, because Amazon, of course, was a company that wasn't profitable for a very long time. Uber not profitable, but also growth is slowing. Growth at Amazon was not slowing.
Yeah, two big comparisons. The first year Amazon came public was at 97. Their growth rate in revenue was 800%. The next year it was 300%. The year after that, it was 62%. We know Uber's coming to market at a 42% revenue growth rate, and we know that that's actually been declining. The other thing here is scale, Emily. Amazon can scale up. I mean, for every new customer Amazon gets, how much money do you really think they pay out to gain that customer? What's the customer acquisition cost for a company like Uber? I mean, I don't have those numbers, but I can guarantee you it's a lot higher. And so a company like Amazon, a software as a services company, or a company like, say, a Match.com, they can scale up to new customers at a much faster pace with minimal costs, Uber does not have that luxury, and that seems to be where the concern is. How do you continue to scale up? How do you continue to gain market share, and at the same time, keep your capital expenditures and your costs under control?
Right, and keep your riders and your drivers, right? So that's part of the big problem.
Yeah, and we know the drivers aren't happy, and I mean, we've heard from Dara himself basically saying that they're going to have to sort of think about that relationship if they want to get costs under control. So what does that mean? How are they going to do that without making these drivers even more unhappy?
Absolutely. Romain Bostick, thank you so much for breaking that down for us. I do want to turn to my conversation with Uber CEO Dara Khosrowshahi now. I spoke with him at the New York Stock Exchange moments after Uber stock opened at $42 a share. Even then, below that $45 initial price tag, Khosrowshahi was brought in, of course, to take over as CEO of Uber back in September 2017 to put Uber's scandal behind it and to make this day a success. I started by asking him about the debut, which, though big, was not as big as he was hoping for. Take a listen.
You can't pick the timing in which you go public, the week, the day, and today is a tough day for the markets, and as you know, with all the China uncertainty, no one knows exactly where that's going. So you can't pick when you go public, but you can control how you execute as a company. Are you building a great service, and are you bringing in happy consumers all over the world? So we're going to focus on what we can control. We raised a lot of capital to invest and to grow for many, many years. That's what we're focused on now.
So the president set the markets aflame this morning with his tweets. We've got trade talks on the rocks, and you're right. There's a lot of red on the board.
Yeah.
How much do you think this has to do with that, and how much do you think this has to do with Uber, which, to be fair, is still losing billions of dollars a year?
It is, but we do have a road to improve profitability. And listen, as you know, the markets are an amalgamation of lots of things.
Yeah.
There's external issues and internal issues. I don't spend too much time worrying about what's affecting what. Again, I think that the team is focused on building a great service, our ride service, our eat service, now the freight service that is growing as well. I think if we focus on that, we'll build value for long-term shareholders.
Now, you were on the road, and the price kept dropped to sort of the lower end of the range, lower than what your bankers had floated, at least a couple of months ago. What were investors responding to? What were they telling you?
Investors, so there was a group of investors that absolutely loved the story, the platform story, our transportation as a service platform, a $12 trillion marketplace. But I think that how hard it is to execute on that vision, how expensive it is, how capital intensive it is, those are all challenges. And I think the good news about the road is we found a set of investors who are long-term oriented, who believe in our vision, and now we have to execute to make sure that the bet that they made on us is a great bet.
Now, you've compared the company to Amazon. You've got some investors out there who think it might be more like an eBay. There are just big questions about how big the ride-hailing market can be. How do you deliver on the Amazon promise?
Well, we just have to, we've got to execute. And when you think about what Amazon did, they went beyond a bookseller to other categories of retail. We're doing the same thing. Rides are to us what books were to Amazon, and we're expanding beyond rides into eats, into freight. And as we expand these categories, we expand our audience all around the world. And I think that the ones who bet on us, the investors who bet on us, long term, are going to be happy.
But one thing that we didn't see with Amazon is growth slowing down. Growth is slowing down. So let's put it this way. How much do you think you can grow revenue in your 5 most mature markets?
Well, when you look at the platform in general, audience growth for Q1 is coming at 33% year on year. Trip growth is 36% year on year on a $50 billion size. There are very few companies in the universe that can carry that kind of a growth at the $50 billion scale. But when you have a $12 trillion market ahead of you, we've got plenty of penetration.
Even in the mature markets, you'd say?
The mature markets, I think you have to put mature with a quote. I think a lot of companies would die for the kind of growth we have, even in the mature markets.
So Lyft has struggled on the public markets. How much have you been following that, and how much did that impact sort of the pricing we saw today and the sentiment that we're feeling right now?
I think there was certainly some effect. Listen, Lyft is in our category. Now, they're a very different kind of a company. We're global. We're the global player. We're the category position leader. And also, we're getting into a number of different transportation categories than being monoline. So while we don't think that we're a direct comp to Lyft, certainly some people look at it And they went through, they've gone through a tough opening, but I do think that for both companies, going after car ownership, debundling all of these car use cases, it's an enormous market, and I think long-term they can succeed, and long-term I certainly believe that we can.
Lyft says this is their peak spending year. When do you think you're going to get losses, let's say, below $1 billion a year?
We haven't been specific about losses one way or the other, but we have plenty of markets that are contribution margin positive, and I do think that going forward, we can grow the business and improve margins.
So, lots of pages of risk factors. One of them is that you may never be profitable. How much of a priority is profitability?
Profitability is a very significant priority for us. Listen, the great companies of the world can grow, but they can grow off of a base of their internal capital, so to speak, and that is absolutely a goal for us. We don't want to be dependent on public markets for capital. This was important. This was a very important capital raise for us, but believe me, we believe that our business can and should be profitable over time.
Let's talk about drivers. There was a big strike this week, thousands of drivers striking around the world. Certainly there are many drivers that are happy, but they say they don't make a living wage. Is there a way you could sort of implement a kind of a living wage, a longer term plan to keep drivers more engaged in the platform and make them happier?
So listen, when you have over 3 million drivers and couriers on your platform, it works out for some of them and it doesn't work out for others. And what we do have to make sure is our platform, it's a little too variable right now, and we want to make sure that it works out for all of our driver partners, and that's what we're working towards, making sure that they're their own bosses, they can work anytime they want to, they can get on the platform, get off the platform, so there's an enormous amount of flexibility, but there's also variability of earnings. We want to make sure that every driver can be their own micro-entrepreneur, but to make sure that that opportunity works out for them. We are adding in some markets, like in Europe, health benefits, pregnancy leave benefits, etc. So we do want to layer on the kinds of benefits that our driver partners and couriers want, and I think long term we want their lives to get better and better and better.
The co-founder and former CEO of Uber, Travis Kalanick, is here. He wasn't on the podium today, keeping some distance from Uber's past. He's still on the board, though. Do you think he will and should be on the board in a year?
He is a huge shareholder. He has been responsible for creating enormous value. I don't think this company could be where it is without Travis's efforts, and he's a great board member.
So you think he'll still be on the board in a year?
I hope so.
So Lyft stopped reporting bookings, take rates. What will you be reporting on a quarterly basis? Will you be reporting those metrics?
We are going to be reporting bookings because we think it's an important factor in any investor's decision.
So for the quarterly watchers out there, where's Uber going to be in a quarter? How do you want to be judged?
I think if you're a quarterly watcher, you shouldn't be an investor in us. We're building for the long term, we're building for the year. Of course we are going to announce quarterly results, but this business is going to be volatile. And if you're quarterly sensitive, we're probably not for you. If you want a business of significant value over the next 3 to 5 years, and also significant value for the world, then we're your company.
What about where is Uber in a year?
I think Uber is going to be bigger and better. And I think we have a great plan to get there.
Okay, so if you're on a mile marker, which mile marker are we at?
We are just beyond the start.
Just beyond the start.
There's so far to go.
All right, only early days, he says. My conversation there with Uber CEO Dara Khosrowshahi. Much more about Uber coming up. But first, trade warriors, higher tariffs officially in effect, and China says it will strike back. We'll talk about the derailed talks in Washington. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. China has vowed to retaliate after the U.S. went ahead with a new round of tariff hikes. The hike from 10 to 25% impacts a slew of tech products. We're talking telecom equipment, computer circuit boards, processing units. This is delegations from both sides wrapped up high-level trade talks Friday. There was no deal, but there also wasn't a complete breakdown in negotiations. Investors weighed in on Bloomberg TV throughout the day.
This trade war is now getting a bit more serious.
It's not good for global growth.
The markets could get worse from here.
This will not be over.
It's a process that's ongoing.
This is not going to be decided over 1 week.
It's quite hard to work out where you come out.
I would be happy just to know that they're going to continue talking, they're going to continue working.
It will create some ongoing business uncertainty.
Ultimately, they'll find some common ground to work on.
Net, we still think a deal will eventually get done of some kind.
I don't think we should be moving in from an exuberance to a panic mode, but it's probably time for pause and a reflection.
This next stage of the trade war gets a little bit more painful and a little bit more visible.
To discuss in Washington, we've got Bloomberg's U.S. economic policy team leader, Sarah McGregor, and here in the studio with me in New York, Asia Society senior fellow, Isaac Stonefish. Isaac, good to see you in person, finally. So we just got some new comments from the Vice Premier, Liu He, who said the talks were constructive and candid, and they will continue, and yet no deal. What's your take?
So I think we are in a situation where things are probably going to get worse before better. I don't want to say is it the storm before the calm, so to speak.
Why do you say that?
I think that the markets and a lot of people following this thought, okay, we're going to get some sort of superficial deal. Both sides are going to have something that they can bring home, and then we'll move on to the host of other issues that the U.S. and China need to solve. But not being able to come up with any sort of symbolic compromise between the two sides means that both of them are further apart than we thought, and it doesn't feel like either side wants to be the one that compromises.
Liu He also saying we're just getting these headlines in, China will never compromise on principles. Doesn't sound too cooperative in that sentence.
Also a total meaningless statement.
All right, Sarah, look, tell us exactly what happened today. You know, talk started to break down last night. They continued talking into the day, but left it open.
Yes, well, the day started with Trump tweeting saying he's in no rush for a trade deal, of course, before the markets open. So he sort of set the expectations for the day that, you know, there was, if anyone had any shred of an idea that there might be a deal announced today, that wasn't going to happen. I think really what is clear to us now is, well, there wasn't a breakdown in the talks. You know, the stakes are higher than ever. We've heard from our sources that the Trump administration has said to China, look, you give us a deal in the next 3 to 4 weeks, or we're going to move ahead with this threat that Trump gave us on Sunday of imposing an additional 25% tariff on $325 billion of Chinese goods. And why is that important? Well, that would be virtually then every import into the U.S. from China would be hit with tariffs. And that's really where you're going to see the Silicon Valley types be hit. You know, that'll be your iPhones, your toys, your TVs. That'll be everything unless there's some exclusions. So the stakes have really risen today.
Now, one of the president tweets from this morning, talks with China continue in a very congenial manner. There is absolutely no need to rush as tariffs are now being paid to the U.S. Treasury by China of 25% on $250 billion worth of goods and products. These massive payments go directly to the Treasury of the United States. Now, slight correction, these payments do not go to the Treasury as Trump claims. They're actually passed on to the consumer. So, Isaac, yes, and I've got a chart here in the Bloomberg, we see the trade deficit has narrowed between the U.S. and China in the last several weeks, the last several months. However, where does this leave us?
The message that the government wants to send is that U.S. investors, U.S. corporations should think twice about increasing their investments with China. And it seems like the Trump administration, I don't think Trump himself maybe is thinking this through subtly, but other people in the Trump administration want the U.S. to start decoupling its economy with China. And this would certainly be pretty devastating for a lot of people in the tech community on both sides of the Pacific. But there is a real desire among some sectors in Washington, D.C. to see the United States not isolationist, but far less reliant on China.
So, Sarah, what happens next? As I understand it, the U.S. has told China, we got to lock this up in 2, 3, 4 weeks, or things are going to get worse.
So, you know, we've kind of heard these ultimatums before. So, you know, right now what we expect anyways is that, you know, there'll probably be some low-level talks that will go on. There's been video conferences. It's obviously a pretty big trip to go to Beijing or Washington from the other side of the globe. But there's no, as of right now, scheduled meeting between these high-level officials yet. Not to say that won't happen, but you know, it wasn't immediately scheduled. So provided that things do progress, you know, we expect some high-level meetings. Trump will be at the G20 meeting we expect in Japan at the end of June. That's always been sort of a target date, perhaps that he might even meet with President Xi Jinping at that point if there was a deal to be made. So we're sort of just keeping our eye on a day-to-day basis as the markets are, as investors are, to see what the next beat is.
So, Isaac, what's your sense of what's going on the Chinese side? Perhaps they miscalculated the U.S.'s willingness to do a deal on their terms. There was also this discussion of, some of these compromises would require a change to Chinese law, which they are not prepared to make. Or did they just bluff?
It's a great question. I think it's worth remembering that the Chinese system is not so dictatorial that whatever Chairman Xi says immediately happens. There's a lot of special interests that he has to corral in order to convince various stakeholders to work closer with the United States. And there certainly is a conservative old guard that would rather see China going alone. And I think where we are today is that it's really hard to know what Chairman Xi wants out of a trade deal with a much better understanding of what Trump wants. And it could be that he's all for this. It could be that he's very reserved and he's using other ways of communicating that. But it's very confusing.
Really, anyone's guess at this point. We'll see what happens over the next 2 to 4 weeks. Isaac Stonefish of the Asia Society, thank you as always. Sarah McGregor for us in D.C., thank you as well. Coming up, Symantec sinks on the surprise departure of its CEO. What does it mean for the company's turnaround plans? This is Bloomberg. Shares of security software maker Symantec plunged 12% in Friday's session. The company says CEO Greg Clark is stepping down and leaving the board. Meantime, Symantec forecast first quarter profit that fell short of estimates. Many analysts who cover the company reacted negatively to this news, with Citi's Walter Pritchard writing that he expects a big reset with a significant operational review. JD.com, China's second biggest e-commerce operator, posted revenue that topped analyst estimates as Chinese consumers defied a slowing economy to boost spending. Revenue rose to $18 billion in the period as it invests heavily in warehouses and distribution networks to scale across the region. And Netflix is stepping up efforts to serve Chinese-speaking viewers around the world. It has acquired the rights to another show from Alibaba's Youku video service. The comedy, called I Hear You, will be streamed in 190 countries and regions. Netflix has been investing in Chinese language programming for distribution outside China. Coming up, in the most highly anticipated IPO in years, Uber closes the day below its IPO price. We'll talk about the ride-hailing giant's rocky first day. And we're live streaming on Twitter. Check us out at Technology. Be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. Technology. I'm Emily Chang in New York. Back to our top story of the day, and that is Uber hitting the public market. It is the biggest IPO in 5 years, but still not as big as early investors and employees hoped. The ride-hailer fell more than 7% in the first day of trading, bringing its market cap to just over half what its bankers initially floated. This as China-U.S. trade talks hit the skids and markets sunk across the board. Earlier today, I asked Uber CEO Dara Khosrowshahi about the timing. Take a listen.
You can't pick when you go public, but you can control how you execute as a company. Are you building a great service, and are you bringing in happy consumers all over the world? So we're going to focus on what we can control. Profitability is a very significant priority for us. Listen, the great companies of the world can grow, but they can grow off of a base of their internal capital, so to speak, and that is absolutely goal for us. We don't want to be dependent on public markets for capital. He is a huge shareholder. He has been responsible for creating enormous value. I don't think this company could be where it is without Travis's efforts, and he's a great board member.
Khosrowshahi there talking about Travis Kalanick, former CEO of Uber. The markets still ended the day flat, though, ultimately, and Uber ended the day 7% down. Joining us to discuss, Wedbush analyst Dan Ives, who covers Uber now, and our very own Eric Newcomer. We spent a lot of time on the floor today, Eric. It was set the mood for us. I mean, the opening price, it kept dropping, and then finally it opened at $42.
Well, it was just
not
long.
what you would have wanted.
I mean, you're standing there in a sort of pen as a reporter, watching all the board members stand there, and there are these traders sort of coming up with numbers, and they have this indicated range. So it starts off, I think it was 46 to 48, and then it just moves down and down and down, and before you know it, it's below the IPO price, which is definitely a bad sign, and just keeps going down. So that process of sort of slowly admitting a bit of defeat there was just sort of hard to believe given all the ramp up to the IPO, and like you said, talk of 120 billion at one point. But
from Uber's own bankers.
Right, that pitching the IPO, that's clearly where Uber wanted to end up. Dara Khosrowshahi and Nelson Che, the CFO, have incentives to get the company to 120. And so they have a long way to go. I think it's 74 ballpark market cap right now. So a long way till they get to.
I think it's about 69.
Oh, wow. Yeah,
69,
exactly.
at least according to the Bloomberg terminal.
Yeah.
So Dan, what happened?
I mean, it's not a storybook start to the IPO. And look, I think fundamentally part of it is the Lyft car crash coming out of the IPO has definitely made institutional investors a little hesitant on Uber. And I think also this is one where, look, it's a risk-off trade that we're seeing in the tech market. Obviously, timing, is not ideal. But I think fundamentally it comes down to the $100 billion question continues to be, will investors kind of buy into the sum of the parts value? In our opinion, we believe this is kind of a near-term speed bump. We don't view this as this is the start of a Lyft 2.0. We think this is one that's going to be more of a blip rather than the start of a trend here.
Now, Eric, you pulled Dara aside after my interview and got to talk to him a little bit more. Did you get any more indication about where his head is at, what the plan is now?
We got into some of the technicalities of the IPO process. For instance, I asked him, what metric do you think investors should watch over the next 3 months? It was interesting. He said bookings, which is a metric that Lyft isn't sharing. So some antagonism I took there saying, oh, you should look at the very top line. It was interesting from your interview sort of saying that there was the focus on getting to profitability at some point, but it's all sort of a matter of when.
Right. And Dan, you pointed out, Lyft not reporting bookings now, take rates, investors did not like that. Dara is saying we are going to report bookings. So do you think that greater transparency, at least to start, is going to help Uber?
Yeah, I mean, they're going to have a brighter spotlight on them because I view them as a different animal in terms of where Uber is, not just globally, but in terms of that three-head value, that we're seeing in terms of ride sharing, eats, freight, as well as an autonomous. But transparency needs to be key because right now it's not just investors they need to keep happy, but also on the other side, they need really to be a transparent company. And it's something where with regulation and other issues, potentially around the corner, they need to do a balancing act here. And to get a $100 billion valuation with no profitability, remember Amazon, Facebook, when you go back to, even though they had profitability, this continues to be a show me story. I think that's what you saw today.
But Amazon's growth wasn't slowing out of the gate. Uber's growth is slowing. Can we really compare it to Amazon?
Well, I view it as more the Amazon of transportation. So I don't necessarily put it in that hallowed sort of ground where I put in Amazon, but I think you have to look at how tech investors are viewing ride sharing. It's 90 million consumers. Eats is 15% penetrated, and it's where this could go. And look, it's a 3% penetrated market across the board. That's why any tech investor right now, at least I could tell you the whole day talking to them, they're doing their math trying to figure out a sum of the parts where this is worth, especially in like what we've seen with Lyft, where that continues to drop like a rock, even today because of the Uber. Right now in ride sharing, even though Lyft is Uber's, what I view as their little brother, it continues to have a negative impact on Uber stock.
And by the way, Lyft also ended the day down more than 7%, so they fell in tandem. Eric, what are investors telling you? Do they think it's the next Amazon of transportation, or is it the eBay
Well, I think, and I've said all along, and we're going to freak out today, but I think the fact remains that there are investors who believe in the story and understood that they didn't get everything about Amazon when it came along, and now Jeff Bezos looks like a genius. And then there are other people that say the losses are so large, there's no way you can model how this company makes a profit. You're depending on total transformation in the transportation industry. And so when you have these really dueling approaches to looking at the stock, I mean, we had Lyft have its quarterly earnings beat analyst expectations on most everything. Most analysts said this looks good, and the stock still went down. It shows that there's a disconnect between how sort of the market, who wants to think about this in terms of revenue and growth, understands the stock, and then a lot of skepticism outside of that.
Now, Dan, you put out your note last night before the company went out of the gate. Your price target $65. It's still $65, which would give Uber a $109 billion valuation. Does the reaction today give you any pause?
Not really. Look, I mean, let's call it like it is. This is not an ideal start coming out of the box for any IPO.
And look, this is just the first day. There's a
and especially given the microscope that Uber's under. But in our opinion, in terms of where we see this over the next 12, 18, 24 months, this doesn't move the needle. But it also speaks to, like, I could just tell you, Lyft, the hypersensitivity to what we've seen with Lyft, with that sort of train wreck so far coming out of the gates. Shorts are out there. They're looking at Uber. You look at the stock. You're like, why can't it happen again? That's why Dara, what he's talking about in terms of transparency, is key. They need to make sure they don't make the same mistakes that Lyft's made.
Eric, let's talk a little bit about the personal drama. Dara asked Travis Kalanick not to be on the podium ringing the bell. Travis was there today with his father and trying to sort of hide from reporters. I think you caught a glimpse of him. What was your take on Dara's answer to whether Travis will be on the board in a year?
Dara has a very tough position because I think there are a lot of new investors coming into Uber that have to sort of be told that this is a different company. And so on the one hand, he needs to say, I'm the leader now, I'm the face of the company, we've reformed, we're not that same old company. On the other hand, Travis is a major shareholder. He's the one that got it to the 76, not quite 76, but that price in the Saudi round. A lot of the valuation gains that have come are under the leadership of Travis Kalanick. So Dara has this hard position where he needs to keep, a sort of hostile force close to him while also signaling publicly distance. So honestly, I give credit to Dara being able to thread the needle, sort of say nice things while distancing himself. He put a bunch of old, longtime employees that Travis likes in the box. So I think he made a smart move. It was longtime Uber people who have really run a lot of the core businesses being celebrated. It just wasn't the guy we've all heard of, Travis Kalanick.
Uber's diplomat-in-chief,
Exactly.
Dara Khosrowshahi. Okay, Dan, are you confident in Dara's leadership?
Look, I mean, I think we're confident in his leadership, but ultimately, as we're talking about some of these other companies, in terms of in Amazon, Facebook, Google, they all had special leaders. And I think that's why he's under a little more of a microscope in terms of what he needs to do for Uber. Forget the, some of the noise, but in terms of just executing fundamentally on the vision, I mean, no doubt, there's pressure on him and the management team now to execute. It's a show-me story.
All right, we'll see if they can show us. Dan Ives, Wedbush, Eric Newcomer, now covering two public companies. We'll be relying on both of you a lot. Thank you. All right, Pinterest was initiated with a buy rating and a $34 price target by Nomura Instinet. Analyst Mark Kelly, he called it the fastest growing company in his coverage universe, which includes Netflix and Facebook. Kelly wrote that Pinterest's domestic user base is already 25% bigger than Twitter's. He also expects international monthly active users to increase at a more significant pace. Coming up, Apple's iPhones are getting a new chip. Will customers see any difference? This is Bloomberg. Later this year, Apple is expected to unveil 3 new models to succeed the iPhone XR, XS, and XS Max. And with the new models comes a new chip. Bloomberg has learned that Taiwan Semiconductor began early test production of a new processor for the next line of iPhones. Mass production of the chip, dubbed A13, could begin as early as this month. Joining us from LA, Bloomberg's Mark Gurman, and in San Francisco, we've got Bloomberg's Ian King. So, Ian, what's the significance of this?
Yeah, I mean, for a long time, the A series of processors has been a key differentiator for Apple. They've been able to basically make a very tight link between that hardware and that software, which, you know, is really the best way right now, because these things just haven't really changed in function and form for, you know, the last 2 or 3 years. So it's a way of fine-tuning it and a way of getting, you know, their apps, their operating system to work much better than the alternatives.
Mark, is this something that we would see as consumers or notice a difference in the iPhone?
I hope so. I hope the next iPhones will be faster. I think that would be a drawback if it wasn't. You know, these chips, each year they add new functionality. A couple years ago, we got this machine learning component for artificial intelligence. There's talk about them integrating more of the processing for augmented reality onto the CPU itself, which is the main chip. They've been working on main chips for Macs. So this is, you know, just another new chip every year, and they come out with new iPhones. They include a new processor. This is the new one. We've learned now that it's going into mass production, which essentially means the phones are on track to launch in the September timeframe like they did last year. So this is a key milestone for the development of Apple's most important product. But in the grand scheme of things, it would be more surprising if they didn't start going into production around now.
Meantime, Ian, Apple has been focusing on designing its own chips. How has that changed the industry, and how will that change the industry going forward?
Yeah, that's a very good question, Emily. I mean, pretty much everybody else in the industry has really focused, you know, their efforts on the operating system and the design of the phone, and left really the guts of it, most of the semiconductor components, to Qualcomm. As we know, Apple and Qualcomm have had a rocky relationship, but because Apple is able to sort of tweak itself, its own components, and do a large part of the brains of the phone itself, that's really enabled it to say, look, our phones are better, our phones are different. And to be fair, a lot of the reviews say, yeah, that's basically true. What that's done is you've seen Samsung, you've seen Huawei go out and start to design their own processors and try to sort of be able to make that claim themselves.
So, Mark, you know, what's next? I mean, you over the course of the next few months, you're going to be working on trying to figure out what else is in these new iPhones. You know, what are the lines of inquiry?
Yeah, I mean, I have to be honest with you. I mean, this year in terms of new hardware products for Apple is a pretty mediocre year on the software side as well, especially on the iPhone. I don't anticipate iOS 13, which we talked about earlier this week, being that big of a jump like we've seen in previous years with iOS 7 and iOS 10. This is going to be, you know, small changes across the system, new health apps. iPhone hardware itself, this is going to be the 3rd year in a row. The iPhone 10, XS. Now this is going to be another S year-like update. Maybe they'll call it the 11 or something else. The big changes here will be around the camera. So, you know, all in all, sort of mediocre, not major changes. But the important thing is you don't really see any of the other phone makers doing anything breakthrough either. I think it would be more concerning for Apple if some phone makers were taking a big leap. You saw Samsung was going to try that with the foldable phone. But as we know, at $2,000 and basically becoming non-functional, it's pretty much a dud. So that really shouldn't be too concerning for Apple. But 2020 is where it's really going to be at. We're going to see major changes next year to the phones, even better cameras, faster processors, 5G, a new design, a big augmented reality focus. So I think 2019 is going to hold people over to the year after. And so next year is really going to be the big year for Apple, I think.
So, Ian, where does Qualcomm fit into this? Because didn't Apple just agree to use Qualcomm chips?
They did, but only in a limited way, Emily. And this has been the historical relationship between the two companies. Is Apple makes its own processors. The main brains of the phone are still designed by Apple. The communication section, the bit that basically goes and gets information from the internet over the radio and translates that into the bits that then the processor makes into voice and the apps that you use, that's, you know, been Qualcomm's forte. Because Qualcomm is very good at that, because 5G is coming, and because Intel just basically couldn't get the job done for Apple, Apple's been forced to go back According to Mark's reporting and some of the reporting that we've seen elsewhere, looks like Apple is going to use Qualcomm for now, but is going to be trying as hard as they've ever done to develop their own modems and bring everything in-house.
All right, Ian King, Mark Gurman, I'll know you continue to watch the supply chain for us. Thank you both. Well, France welcomed Facebook CEO Mark Zuckerberg Friday, but with a threat of sweeping new regulation. The government released a report criticizing Facebook just hours before a meeting between President Emmanuel Macron and Zuckerberg. Bloomberg's Caroline Connon has the details from Paris.
Facebook is not doing enough to prevent hate speech from spreading on social media. The fresh warning comes from France, where Mark Zuckerberg met with President Emmanuel Macron on Friday. The two already met exactly 1 year ago and agreed to come up with some kind of regulation. For several months, French regulators were allowed into the Facebook offices in Paris, Dublin and Barcelona in order to observe mechanisms put in place by Facebook to avoid violent, extremist, racist, sexist and homophobic content online. But the French experts were not convinced. They say that some new legislation needs to be put in place, something similar, they say, to the one applied to the banking system. One measure could force social media to delete unlawful content within 24 hours or face heavy fines. The French President Emmanuel Macron wants to take the lead in what he calls the Tech for Good initiative, something he says could inspire some other countries in Europe, but also the rest of the world. This comes at a very critical time, just 2 weeks before the European elections, which have been the target of a series of fake news. And it's, of course, another critical time for Facebook as well, just 1 day after Facebook co-founder Chris Hughes called for a breakup of Facebook and said that Mark Zuckerberg let his drive for growth sacrifice security and civility for clicks. Caroline Connon, Bloomberg News, Paris.
All right, still ahead, our IPO coverage of Uber continues. We're going to hear from New York Stock Exchange President Stacey Cunningham about how she thinks the ride-hailing giant will perform compared to rival Lyft on the NASDAQ. This is Bloomberg. Returning now to our Uber coverage, I sat down with New York Stock Exchange Group President Stacey Cunningham and asked what she thought about the public debut amid market volatility.
We're seeing a lot of pressure in the broader market overall, given some of the macro events that are going on right now. But I think it's important to recognize that while today is the first day for Uber as a public company, they're in it for the long haul. So we'll see how investor demand sets up for the years to come.
Now, you've been in it for the long haul leading up to this, and I'm so curious, how long has your relationship with Uber been? What went into winning this IPO and developing that relationship?
Yeah, our broader team has had a long-standing relationship with Uber for a long time, going back several years. And I personally have gotten more involved with Uber over the past year since I stepped into this role. So it's a long process, right? You work together to figure out how can we help them be the most successful possible public company out there.
So tell us what goes into sort of wooing a big company. I mean, this is the biggest IPO of the year so far.
Yeah, I think the first thing that comes first is what are they trying to achieve with a public offering, and understanding their goals, and then being able to leverage our resources and tools to help them be most successful. So that's part of the process, and talking to them, understanding what they need, and then working with them on delivering a day that showcases them in a way that gives them maximum visibility is an important part of the process.
Lyft's had a rocky opening, big first day pop on the NASDAQ, stock down, though down below its IPO price, down below its private valuation. How much have you been watching what happened with Lyft to figure out how to run the day?
Every company is unique, and so each company is going to have their own experience in the public markets. They have their own investor base. They have their own teams that are working on that project. So I really focus on how we can help them. Uber here now. I think if you look at the long term, let's take a step back. 10 years ago, nobody heard of Uber. I mean, you heard of them just about 10 years ago. You've been working with them for 10 years, but they were new and they just started. Now it's hard to find a person who doesn't have an Uber app on their phone. And so this is a long game. They completely revolutionized mobility. And over that 10 years, they've really built a platform. So we're excited to see what's going to come next and how that platform will be put to use.
A lot of IPOs so far this year, and you've had some of the biggest ones, Pinterest, for example. That said, given the market conditions, how does that affect companies' readiness to list, willingness to list? Do you think we're going to see a slowdown?
No, I think what we've seen actually, when the fourth quarter volatility picked up a lot, we saw a lot of companies starting to get ready to become public because they wanted to make sure that when they felt like the time was right for them, they were ready. So we saw that work happening throughout the first quarter. Despite the government shutdown, a lot of work went into getting that process ready. And now in the second quarter, we're seeing a lot of those companies come to the public markets. We've had some big names, as you mentioned already, Pinterest, PagerDuty, Uber today. We saw Levi's, we saw many others, and coming next will be the next wave.
The direct listing phenomenon, Slack's going direct. How does that impact you? I mean, is that a loss?
The direct listing is a really interesting. In fact, the New York Stock Exchange is really uniquely positioned to help facilitate that trade, because what they're saying is we're going to have that first opening trade on the exchange be a price discovery process, much like we're seeing happen here with Uber, but without the offering the night before. And so that's a process that is overseen by the designated market maker here at the NYSE in conjunction with some advisors of the banks and the overall interest in the market. Spotify pioneered that offering process, or that non-offering process, last year, and we'll see Slack take that same approach too.
My interview there with New York Stock Exchange President Stacey Cunningham. That does it for Bloomberg Technology.